In this video, we're going to talk about a full anchor VWAP trading strategy with trade examples, how I love to use the indicators, and then also some nice trades of one of my students, how he loves to use the indicator to let that thing flow. Because in the end, it's all about quantity and risk reward ratio and the position size, what brings in the money. So let's start. So this is the E-mini S&P 500 future. We can use this in any market, but I love to trade it in the ES1 exclamation mark using a 1 minute chart because we have 60 candles within 1 hour. So the question is not anymore, when is this good pattern there to enter? Because we have enough pattern. It is more like, when is the good market phase there? And when pulling the market together, we can see here the market does here higher lows. That means the market goes up. And only concentrating on that is enough when the market goes up. When the market does lower highs, such as from here to there, then we can see literally that it goes down. So only concentrating on higher lows or lower highs from a bigger structure. And as you see here very clearly, the market goes up. So once it goes up, now having a rule set on how to place the anchor VWAP. And that is always on the main or always on a mid rotation. And I'm going to show you a very nice example that I really love. That is to place this anchor VWAP always on the origin of a movement or on the mid rotation. That means the market first need to push out and then we can place the anchor VWAP. So for example, here, this is an apex on the bottom, and then once the market pushes out, now I'm allowed to place here the anchor VWAP on the lowest point. And once I was placing that, I know that when the market goes there and just makes me a green candle when the market goes up. If the market goes down, just using red candles. The best would be always color switches. A color switch is always a red and a green candle. I know that when this green candle closes, I can make my entry and put my stop placement there. Now the dangerous part is always to have the stop not where it's supposed to be. The stop should always be under the anchor VWAP or most of the time, and trading always in the same direction. The anchor VWAP can be used also in the other direction. But the thing is, when pulling the market together, we can literally see that the structure is going up because the market does more higher lows from the structure. So there's no reason to sell here, especially for a higher risk reward ratio. Because if I sell here, maybe there's a risk reward ratio of 3 or 2. But if I would buy here down here, like place here the anchor VWAP, identify where the trend is because the trend is our friend, buy here, I could like literally have your risk reward ratio of 5, or even aiming for this higher to the top left, that would be like a risk reward ratio of 11. That means if I enter a position size and I make it so big as possible that it's $100 until my stop placement where it makes sense here on the bottom of this color switch, if that would be $100, this would be $500 including trading commissions of take profit. And this is something what is very important, because in the end it's quantity and risk reward. So that if I have 7 losing trades of, for example, $100, what is $700 of loss? I only need 3 winning trades of $500. That would be $1,500 that I can have out of $1,000, $800 of profit. Because it's not about learning too much the new indicator or like too much increasing the risk reward higher than 7 or 8. It's just about having a risk reward ratio in average of 5, having 2 losing trades a day, trading in different market phases, and making just sure that always increasing the position size within 10 or 20 trades when this one is profitable. So I'm going to show you now some example trades and also some obstacles why the trader here is, for example, not letting the trade run. And this is totally normal. When placing the anchor VWAP, it is very important always to use the rule set that I just showed to you. Always placing it on the either on the bottom or on the top side, such as here on this picture here that I'm showing you. With the anchor VWAP here, this one, always on the origin or in the mid rotation. If the market was going already too much low, not placing it on the smaller structure here or like here. This is something what is very important. Always concentrating on the bigger structure, because the goal is always to have a good risk reward, and almost every hour we get like 2 to 5 trades using the S&P 500 in the New York session, and this is already enough. It doesn't mean that it's every day there, but when sitting down for 9 different trading days, there will be 3 or 4 very trending trading days, and that's already enough for the risk management. Very important. So I'm looking now here how the trader traded. He was not placing the stop under the anchor VWAP. He was very exhausting himself. And then afterwards, he was placing a very nice entry, but he didn't understood where to place the anchor wheel because this is the lowest point, but the mid rotation now is here where my mouse is. Because when zooming out, you can literally see that this is the mid rotation, and when placing here the anchor wheel, it will cut here inside, and he would understand properly that the stop placement down here is safe. And once the trader understands that, it is way more easier for the management, and I'm going to show this to you within the next trades. As you see here, the trader learned how to place the anchor VWAP properly, and he was putting it on the mid rotation, and this is the reason why he was able to enter the trade and let it run. He was unaware if the market is going more higher because the market started to make 4 red candles. If the market is in an uptrend, it's only going to make like 1 or 2 or 3 red candles, and if it's in a downtrend, it's only going to make 1 or 3 green candles, what is very important. But there are some situations where it makes more than that, and what happens is mostly the market will have shortly a hard time, a small contraction phase will occur, as you can see here, or like here in total, like this square here that I just draw in. And this is the reason why the trader was exiting here with around like $100 or just like $70 or $50. And I think it's better to enter the trade than losing $100 and then taking the $50, because 20 times that is already $1,000 of gain. As you see here, the market does then a green candle, and the trader was able to enter the trade and place the stop placement down here. He was a bit cheating and placing it a bit smaller, what I think is very nice when having more experience down. And then aiming here, just like here for a high on the left side, or here the 1-day VWAP, and his risk reward ratio was also good. And you see here the market does here a lot of green candles, a lot of pressure. Actually, there's no reason to execute a trade, except if the trader didn't ever earn like $1,000, $2,000, or $3,000. Then I think all that's important is just like to have this 3, 4, 5 winning trades out of 10, a risk reward ratio of 5, and just quantity in. So the next trade that I would like to show to you is like more trending phase. As you see here, the market does here a lot of green candles, and this is the pressure that I really love. Now when placing here the anchor wheel on the bottom or like a bit top, you will see that it cuts here in, and this makes it such a good trade. But here's the thing, we can also do the same using a 1-day VWAP, and the 1-day VWAP is just like when the market is crossing it and then just making here an entry. As you see here, the trader was entering the trade. The trade was going fast and profit, what is very important. So once it comes back, we can literally close with maybe only $50 of gain or $100 of gain, a small risk reward sadly, but not getting stopped out. We can literally see before we get stopped out, and a lot of times, as you see here. And then the trader was entering the trade again, stop placement down here, and you see here the market pushes up, and then he was exiting the trade with a very nice risk reward ratio. Now as a bonus, I would love to show to you literally like how to place the 1-day VWAP inside, and that is if I go here to the indicators using trading view, is here 1-day VWAP. If I just go here to the volume weighted average price, I can just place this one in, and then placing always the bands out, putting on style, making this one a bit thicker, very important here. You can also use here violet line. I love to use violet, or like this bright violet here, one of these is pretty nice. And then here also the anchor VWAP, you can find it just to the left side on the fourth from the top, and you find here the anchored VWAP. You can place a star inside, and then it will be in this small task here. The same thing is also for the phone. So the thing is, and this is very important, if the market is in a flat contraction phase such as here, it's hard to identify is the market pushing out or not. But if the market is literally going up like this is nice. Some traders can identify to trade these kind of contraction phases, but it's very hard, and it takes a lot of experience to pull the market together to identify where's this mid rotation here, for example, here to the left side, and then placing here the anchor VWAP. And then once the market crosses that, the blue line here that you see here, once the market does here now a higher low, this is very important. A higher low is a red and a green candle. You can see here red green, right? It's just too hard to trade, and you can see it goes here down. Red green goes lower, red green goes lower, red green goes lower. Here red green goes higher, but this green candle here is too long, sadly. Then again, red green goes lower here, and here red green goes higher, and then this green candle is too long again, and then red green goes lower, and then red green goes higher, it's again too long. But here you can see a nice reference that here does red green, and the red green candle is so small. So the green candle needs to be always small, because when entering the trade and placing here the stop placement or here the color switch and then aiming for this height, there's a risk reward ratio around 1 to 5, what is very important. Sadly, this trade wouldn't have worked. We would have maybe here exited with $50, but it's just about like there are times that it's way more easier to trade, and there are times it's just like pretty messed up, but still placing a trade I think is very important. It would be better to sit down like 9 trading days and then only trading 3 or 4 trading days of them if the market is more trending, as I just showed to you in this video. I hope you can take something out. Go to tradewithjd.com/training. It's free. I hope it literally helps you out, that it's a full guide, a step-by-step guide. What I think is good, what I would have wished myself to have earlier to build a good trading performance to make myself ready for trading. And I wish you all love, good trades. JT out.